What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 27th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are. I hope you're hanging in there with all the craziness in the markets. Today's video, I want to do a couple different things. I do want to dive into some various metrics that are going to be really focusing on why I'm holding the opinions that I have on the market. But before we even dive into that, I want to spend some time just to chat with you guys real quick. I understand right now whether you're just in kind of a neutral mood about the market, but I know many of you are probably in a much more fearful mindset of the market with the way price action has been. I want to go ahead and just let you all know that it's completely justified to feel that way. It's obviously been a very difficult time in the market, and as many of you know, if you've been watching the channel since as far back as 2017, or at least over the last few years, you guys know that we've been through this rodeo a couple times. And all the while, for perspective's sake, when we started the channel back in 2017, I remember the days when we were covering Bitcoin at $3,000. It's crazy to think that we're right under about the $30,000 target, about 10x in growth here. And that's after a over 55 to 60% correction from the previous highs. Really puts things in perspective if we take a look back over time. Now, I want to go ahead and share with you all here today some important thoughts about the market. And I want to go ahead and again drill in this point about not getting caught two steps behind. I know it feels like, since I've been saying that over the past few weeks, that it's just been absolutely painful. It's been absolutely detrimental, in this case, to continue remaining in a hold position. But I want to go ahead and talk about why, whether that is the case here today or tomorrow, why over the next few weeks, it is probably better to just simply hold out than to panic sell. And again, it's very, very easy to let short-term fluctuations, chart moves, and especially our time frame perspective on the chart, it can allow us to mislead ourselves if we allow our emotions to get the best of us. And I'm going to go ahead and talk about that a little bit here. There's a lot of history when it comes to this principle, okay? So stick with me, guys. More than anything, I hope this video will provide value to you all. If you're investing in Bitcoin and crypto space, I'm going to try to give as much of a perspective as I can as we go throughout the video, okay? Now, first off here, I just want to go ahead and focus here on Bitcoin's price chart. Generally speaking, for the past few days here, since back here on May 11th when we had the capitulation candle, we've been seeing Bitcoin generally go sideways with a formulation and the trend starting to tip a little bit lower here. Now, as you all probably remember from the past few previous videos, we talked about how there wasn't going to be an immediate rebound. It usually is not the case that when you get a capitulation candle, you just absolutely start going vertical. What you generally need afterwards is a period of time of sideways consolidation. Now, when we're talking about sideways consolidation, it's a period of time where a lot of people are riding on the edge because people are thinking, oh my gosh, the market's already dipped as much as it has, and now we're starting to trend sideways. There's no clear trend in this case. The market's about to roll over again and just absolutely go down to all the targets that people were talking about, 20K, 15K, all these different price targets for Bitcoin. And again, I'm not even here to debate that long-term you couldn't go down to 20K in regards to price like over the next preceding months if we are in a long, drawn-out bear market and the Fed is really going to be hawkish. But in the short term, that's exactly what the whales in market, you can call them market manipulators, but I would call them, as Wyckoff does, the composite man, right? The guy effectively, or the group of investors behind the scenes who really run the show and play a large role in driving price upwards and downwards. It's exactly what they want you to think. They want you to panic out of your positions during consolidation. Because what consolidation gives them as larger scale investors is an ability to build sizable positions through limit orders while you are market orders selling your positions into fear, okay? And that's a big difference here. We need to understand when you're talking about institutional investors who are, rather than maybe a retail trader in this case, trading positions of a couple $100 to a couple $1,000, and I'd say even again those participants who might be trading a couple $100,000. These large-scale whales or investors, whatever you want to call them, they are buying multi-hundred-million-dollar positions, if not billion-dollar plus positions. And it's much more difficult to fill those positions at a favorable price unless you have market fear setting in. and a lot of market order flow, selling positions into the best available bids. So notice here, for example, that all the while here we've had the kind of capitulation candle back here on May 11th. Since back here, and we're taking a look at the 12-hour chart here, right? So the last couple of days, generally speaking, price has been relatively sideways here. There's been a lot of accumulation going on. But the final wave of accumulation is likely going to come in from some type of retest down towards this low range, making people think the prices are going to collapse, therefore leading into the heavy market order flow to the sell side, filling in the bids or the buy orders at given prices for these larger investors. And this is, typical Wyckoff. If you guys really want to dive into this or want me to do a video diving into what kind of the Wyckoff methodology is, understanding what it means within the market, I'd be happy to dive into this. If you guys could maybe leave a comment or two down below and give a like to other comments talking about if you guys want me to chat about it and do a deep dive, be happy to do that. And it can seem a bit like technical, I think, for some people, but in reality, it's a general price pattern or formulation of price action that signals the institutional investors are accumulating, and most importantly, that they want you to be knocked out of your position. And they know exactly how to do this because these patterns, as Richard Wyckoff wrote about, have been repeated throughout history time and time again. This is something that has applied in traditional equity markets, it is applied in foreign exchange markets, in commodities, and it will apply to cryptocurrencies because it is all based around the similar principle that humans are emotional. And we see similar trends in other markets like we do in others, and therefore we are going to probably act the same way. As crypto becomes more institutionalized, and therefore there are institutional players, they are using these patterns to knock you out. They're effectively trying to take up your cheap positions because they know if they play this out, maybe not you as an individual, but the majority of the kind of emotional active traders in the market who very likely bought higher than where price is right now. It's no offense, I'm not saying anyone who bought higher is emotional. I'm just saying here that there are a lot of people who bought into the excitement of the market. They know that those same exact traders will capitulate and try to be smart and sell their positions down here at the lows, which will fill in those bids on the order book from those large investors, giving them a cheap entry, and they will do the exact opposite. Rather than accumulate, they will distribute, they will sell their positions and do practically the counter opposite of this a couple months to a year or two down the line, when the market is euphoric, when everyone's excited, when there's market order inflows from retail investors to buy positions at those high prices, riding the trend and the hype, and they're going to start distributing, they're going to start selling their positions, right? And there are these major steps. You've got preliminary support, the selling climax, right? These are kind of what we probably experienced the other day here, right? As we were capitulating in price, a rebound up, and then you have, in this case, the selling climax, the effective event where you have all these liquidations coming through, right? So we saw that play out here. And again, the other repeated steps are a variety of important critical steps here to push price aside rather than up or down, and effectively give a period of time where institutions can get a ton of bids filled at a lower range here. Again, playing off the emotions, basically driving price down here from these short-term resistance points, keeping it within this trading range, getting those bids filled here, providing the support with those bids, and then as price comes up here again, providing just enough sell-side pressure just to keep pushing things aside, playing off your emotions. And we can say that this is, again, market manipulation, whatever. I'll be honest with you guys, I don't think it's market manipulation in the sense of doing something illicit or illegal. Maybe it's not moral, but to be honest with you all, this is how markets work. And the thing is that they play off of people. And again, I don't mean it as an insult here. Trust me, I've done day trading, I've done swing trading before. I've generally gone towards more of a swing trading, long-term investor mindset because I've learned that this methodology is playing off of the active liquidity. Those who have short-term time frame preferences, those trying to make 100% overnight, because those mindsets are failures in the long term. They do not play out to the benefit of the investor at the end of the day. Rather, towards the long-term accumulator, the composite man, the one running the show effectively, right? Who's playing these effects on price. This is, again, not some kind of conspiracy. It's just how markets work. And we've seen this pattern repeat time and time again. Now, I want to go ahead and continue the conversation here. I hope this, more than anything, has really provided some good substance here for you guys to just be able to, in effect, take a hold position to just kind of stomach the volatility. Because I want to go ahead and talk a little bit about what's going on in the equity markets as we're diving into this conversation about crypto. I understand, guys, for Bitcoin and Ethereum, as we'll talk about a little bit later on, I know things have felt quite fearful. We're really hanging down towards those lows. Fear still setting in. But take a look here at the Nasdaq. Really, for nearly the last 3 weeks, or at least the last 2.5 weeks, the Nasdaq has actually been neutral. After yesterday's move of over 3%, we saw the tech stocks rallying back in, just like we saw over here, right? These big kind of accumulation candles here coming from the lows. Buyers coming in, taking on the 31.5% discount that we've gotten over the last 127 trading days from here in November down here towards May. Now, I'm not saying to go all in. All I'm saying is that right now, it's a good reason to hold here to see that for practically 2.5 to 3 weeks, the tech stocks, which have really been cratering and probably playing a big role in dragging Bitcoin down with it, they're relatively neutral now. And in fact, if you take a look even beyond that, if we take a look at some of the really speculative kind of ETFs or the innovation-based ETFs like ARK, we've set in a higher low here. One that's been bleeding here and being left behind against the S&P 500 after leading it back during the crazy monetary policy experiment that the Fed went through in 2020 and 2021. We are now seeing, for the first time in a while, a substantial, well split up, higher low pattern here. And I'm really excited to see what this is going to showcase for equities here. If you can start to rebound some against some of these losses, that's going to give you the full scale setup for a relief rally, whether it's a dead cat bounce or the bottom. Again, that's something for us to determine when we take a look at price later on. All we know is that it's probably best just to stomach the volatility, to hold out for a little while. Now, outside of that as well, we can see this in the S&P 500. Same exact scenario. In fact, almost has come back up here towards May 2nd. Almost an entire month of fear and absolute panic and turmoil and volatility practically reversed back up in a matter of just a few trading days, practically the past week. We've come back here towards the entry point here in May. That's really exciting to see here, especially after we've come down here towards a previous contestment range here, where there's been a lot of volatility in the past and multiple retests of support. All right, so that's, again, something important to keep in mind here, is that we're likely going to see some kind of relief rally, just like we saw here back here. And again, I think people really sometimes can lose perspective of how much can be rebounded here in price, right? We had a pretty harsh correction here, about a 12.3% portion of this overall correction. But look, right afterwards, we came up here and had an 8.9% rebound here. And effectively, to put that in perspective, the original correction of 12% really was mediated down towards a 4.6% correction. And the same exact thing played out here, right? We continued from 4,500 down here to 4,200, but lo and behold here, look at that. We came actually right back up to a higher price point here. Right? I'm not going to say here that we're going to climb all the way back up here to 4,500 or back up to the highs here, 4,800, but you're probably going to get a much better price point than where we're at right now on the S&P 500 index or the Nasdaq. It doesn't really matter what index you're looking at. Again, you're probably going to expect some kind of retest and rebound of about 5-10% in price. So you can at least, if you want to still get out of the market, get out at a much better price range. Right? Don't get knocked out at the lows here by those acquiring at a historic bear market territory that accumulation usually happens at a 30% or 40% correction. Now, I want to go ahead here and talk a little bit, though, about the relation of Bitcoin and the Nasdaq. You guys know we talked a lot about the BTC Nasdaq ratio and how, again, we were looking for this range to hold support here for some time. We eventually, back here in May when we got the capitulation candle, had broken below this wedge range, this higher range of support over time. And now we're just generally consolidating sideways here at a pretty important point here where we saw consolidation and general support in the past here. But I want to go ahead and talk about really how bad it could get here. Could we see the Nasdaq continuing to once again outpace Bitcoin, effectively this ratio going down? And I think that, again, yeah, you could probably see it. And it's probably down here at the 2-point range here. This is the Bitcoin divided by the Nasdaq 100. I think you can generally see as we're in this kind of accumulation channel here, you could see a couple more weeks of underperformance here until we start to really see a substantiated relief rally in the equity markets. So if that's a reason for you to panic sell, that's fine. But honestly, this is really not much of a declining range, or at least a range of getting outpaced by the ratio here. It still likely means that Bitcoin will probably start appreciating higher if the Nasdaq goes up as well. It just may not move up as quick here in the next week or so. We might have to give it some time to retest towards this low range. But that's honestly probably the lowest we could go here, as we saw this retest back here in June and July of 2021, right? We're already at a pretty historic solid discount range here for Bitcoin against the Nasdaq here. And I wouldn't expect it to remain in this range very long. As we saw here, a rebound came out very soon after, even after the heavy capitulation sell we had back there. Now, one thing again that I know is on the minds of a lot of people is to kind of take a look at the altcoin space, as the ETH to BTC ratio has cratered a bit lower here over the past 24 hours. We had about a 2.25% decline here, but really effectively in real terms, we saw altcoin dominance drop from around 54.7% down here towards 53.2%. This is again following the correction we saw here in the ETH to BTC ratio, breaking below the kind of general support line that we've been watching for some time, after having a 6.6% decline here on Ethereum. Now again, let's not get too caught up here and absolutely capitulating in. We're down here towards the general low range, but I have to say here, it generally does bring up a good point here that if, for example, you're in like a loss position on Ethereum or you're generally neutral, it might be good here, and even maybe if you're still up in the green a little bit, to potentially rotate from ETH to BTC, because the altcoin market is not showing the same kind of similar strength here that we're seeing within Bitcoin. The resiliency of Bitcoin during this correction has been much greater here than what we've seen for Ethereum, at least here according to the ratio. We've seen the decline here from just back here, for example, in May, coming down about 21% here against Bitcoin. So the favorable asset here right now, at least in the trend until we get some kind of confirmation, is going to be looking to resort to Bitcoin here. But in this broader topic of the altcoin market here, there are a whole range of different cryptocurrencies here. And I think one thing that's important to understand is that all the while we might see a bit further downside, we're in typical pullback territory where you're going to get some buyers coming in. So again, this kind of viewpoint of looking at things as micro corrections, micro corrections in price, I think is really helpful sometimes to, again, not get caught 2 steps behind and wait for greener pastures to start reversing positions or even taking profits or chips off the table effectively. Let's take a look back here the past year, since May of 2021, right? We had many corrections, many of which were either in upper single-digit territory or double-digit correction territory. 14.8% correction, 11.8% correction, 7.7% correction, a 13% continuous correction. We saw in here as well another 8% correction, and the current one we went through about a 9.58% correction. Seems a bit scary, right? It's easy to get caught up selling into the fear here in the market, but in reality, we're at a correction period range here. It's pretty similar here to the past. Upper single-digit territory, getting very close to that kind of low double-digit territory range, where you eventually see buyers come in and greener pastures for altcoin dominance. Buyers coming back in, the ETH to BTC ratios recovering to some degree. That's what we're looking for here. We want to sell into strength, or at least de-risk into strength in the market. And that's exactly why you have dead cat bounces. You have recoveries in price that you basically have people taking profits into that strength, and therefore you have a lower high from the previous high that you had in the past. That's effectively what defines a dead cat bounce. But all the while here, I think there's going to be a lot of strength coming in here into the altcoin space, a lot of kind of fear buying in the coming weeks. I don't know if it's going to happen immediately, but it's something to definitely look out for. And again, from there, we want to be able to take advantage of that strength and potentially de-risk back into BTC, because BTC dominance might take over the longer-term trend. But there are a lot of altcoin plays as well that are fundamentally interesting and exciting and doing things even during this fear in the market. One of them is today's sponsor, and that is the Cava network. Now, if you guys haven't heard already, as we talked about in one of our previous videos back on Tuesday, Cava has been planning to launch Cava 10, which is its major network upgrade that it's been working on for a long period of time, that brings about a very valuable proposition of merging the Ethereum EVM ecosystem, as well as all the other ecosystems that probably in this case utilize the Ethereum virtual machine like Avalanche, and pairing it with the flexibility and developer tools that comes with the Cosmos SDK and the Cosmos ecosystem. Cava is effectively bridging in these two ecosystems, utilizing Tendermint consensus and allowing for it effectively to serve as a liquidity and application vortex from some of the most popular development ecosystems, as well as ecosystems where dApps are actually being utilized. So there's a few key things here that I wanted to share with you guys. First off, the network is live here. One of the major first applications is Sushi. So if you guys are interested in giving it a spin here and trying things out, I highly recommend you guys dive into it, give it a spin. The network is officially live, so you guys can effectively start utilizing some of the applications on there. And outside of that as well, if you guys want to enter into the giveaway that Cava is doing, they're giving away $250,000 here. So if you're interested to participate in the giveaway, just simply create a 0x address and convert 10 Cava to wrapped Cava on the Cava Ethereum cochain. And from there, you can enter in to potentially win on the contest. More rules and details can be found here in their one of their most recent tweets here. And last but not least as well, there's a really solid Medium article diving into some of the major announcements and details that come with Cava's mainnet launch. So first off, I think it's important to understand here that you can first start by wrapping Cava using MetaMask, so basically bridging assets over into Cava 10. And it's important to understand as well that with this being an EVM compatible chain, all the major DeFi protocols, as well as some of the infrastructure such as the graph and the kind of typical DEXs, Chainlink, will be available on the Cava network at a much more scalable means than maybe, for example, in the traditional Ethereum network, when you still might see spikes in gas fees and swaps costing tens, if not $20 or $30 per swap. Now, with Cava, you're going to have the scalability of Tendermint consensus, and you're going to have the bridging of both Ethereum applications as well as various applications from the Cosmos ecosystem, paving the way for a lot of TVL users to come in towards the network. They've deployed or are planning to deploy over 35 protocols on the network as it started to launch here, and there's a whole range of different things to be excited about, from the Cava Pioneer program as well as the user giveaway for those bridging funds over towards the new Cava 10 network. The Cava Rise program is going to be really great for bringing in a lot of developers. So if you guys are interested in kind of building in a new exciting DeFi ecosystem and you want to be able to get some funding in order to build those applications, definitely check out the Cava Rise program. It could be something really exciting if you like to build in Solidity, or if you like building within the Cosmos SDK framework. So definitely exciting stuff. Congrats to the team on a successful launch. I know that that's very nerve-wracking overall to get something out at that time and stuff and actually take it to mainnet, because there's no really going back once you got it out there. And I'm very excited to see that the team has had a successful launch. But again, all in all, guys, I want to go ahead and take a bit of a step back here, continued decline here in the dollar index. Now, one thing that I was kind of keeping open to a while back, and we even discussed it a little bit within the Dash report, was potentially coming up here, and I'm going to actually have to take it here to the monthly chart. We can actually go ahead and show the chart here, which is basically this idea that we might, in the long term, and I think that this could possibly happen still, bear in mind, that we would come up here towards 117, effectively this long-term declining resistance range for the dollar index, continuing to signal dollar strength, where the Fed might be continuing to raise interest rates and lower its balance sheet. But I think that this is going to happen over a longer period of time. I think in the short term, we might be expecting some kind of decline here in the dollar index as we see relief in U.S. equities, people coming in and buying the dip, effectively taking upon the discount opportunity in equity prices. And I think the dollar index having this kind of top candle like it's got here, similar to what it had back here in January 2017, is a clear signal here that we're probably going to see a cool down in the dollar here for the next preceding weeks and months, giving some relief period for U.S. equities to be able to recoup some of their losses. It could be very short-lived, but it's going to be enough where U.S. equities could start to see some serious upside giving us that relief rally we're looking for, and probably an opportunity for many of us to start to de-risk our positions and de-risk our exposure. Anyways, guys, I've rambled on a good amount here today. If you're interested in learning more about Cava, check out the link down below in the description. If you guys liked this content we dove into and just the conversation that we had at the beginning of the video, consider dropping a like, consider subscribing, and feel free to leave a comment down below as to your thoughts on the market now. But I just want to let you guys know I'm going to be here during good times and bad. It's always something we've stuck true to here on the channel through bull markets and bear markets, through mid-cycle rallies and mid-cycle corrections, during fear as well as excitement. I'm always going to be doing my best to be here with you guys and try to do as much content as I can here on the channel that is focused on providing as much value and perspective as possible. And above all, try to do my best to help us not get caught 2 steps behind and come out much smarter and much better for it. Alright guys, thank you all so much for watching. Have a wonderful rest of your day wherever you are, and I'll see you all in the next video. Take care, everyone.